All right, so let's just go find some Heath levels, right? All right, so back right where we're at right now. See this daily this daily level closed right here, and the bulls retook momentum. We had one green daily so far. Hopefully tomorrow's green. It might not be. It might be red. And put a little more resistance here. It's okay. That gives us some CTM entries to work with as well. But this level right here. So the bulls from the 17th. The bears were in charge from the 17th, 18th, 19th, and 20th. They got 4 days of consistently lower closing prices from the opening price. So the bears were in charge here, and then the bulls took over. Yesterday now on the chart today, but yesterday on the chart, right? So what we're gonna do is we're gonna put a Heath level right there, right? So that's where, and I just use daily. Heath has way more advanced ways of doing this. This is how I use his levels. I just go to the daily chart and I throw the levels on the daily. All right. So that was a big reverse. That's an important Heath level. Now, the market tried to reverse right here. We had one green candle and then it continued down. So this is going to act as a little bit of resistance / support right here. But we're not going to put that on the chart for now. I'm just going to focus on the bigger moves. So we had 2 red days and then an attempt at a green and then a red day. So the way I'm going to do this one is I'm going to start right here. This is going to be resistance where the bears took over. The bears had enough of that 1 day of trying to reverse and they took back over. Same thing really kind of here. I would actually draw this resistance, now support, at the bottom of this candle. A little bit of nuance there. But this is where the bulls failed. So this is the level right here the bulls tried, this 31.6, and they failed. This one was, this is the same general thing. So you could draw it there. The reason on this particular one, I'm going to personally draw it here. If you just look at, think of it as liquidity. You see that this day was an indecision day, right? The candle was a tiny body, mostly wick, right? That's an indecision day. So that means that whatever this level is actually right here, this zone was a huge fight, and then the zone continued through here. So this is a zone that's a big fight, right? So we had 3 days of small bodies. Large wicks. Yeah, small bodies, large wicks. So this is a battle zone right here. So I'm going to draw my level as close to the median of that. And so you see what happened here. The daily closed barely above it, and then we came back and wicked right to it. I'm going to go down to the 1 hour. So these lines, these are fresh lines I just drew, right? When you see how the price interacted with that, it hit this line that we drew earlier perfectly. And I didn't know I was going to do this in the 1 hour. Perfect. So it hit this line perfectly, came back to this level, went down a little bit below it, and then found support here. And now we're working on finding some support there. Okay. So let's go back over here now. Let's see. So that I picked the top of this one. I picked the bottom of this one. You'll see why I picked those 2 levels. I picked this level here. Now over here, same thing. You can kind of see here, if you draw this all the way back over here, this is interesting to me when you have a confluence, right? So I had a big bearish candle, a lot of body. Bears have strong momentum, but then the bulls, a decent amount of body on this. The ratio of the wick to the body also tells you quite a bit about what's going on with price action, right? Candle was taken back out by bearish momentum over here. And I kind of counted the bulls got up to here before the market reversed on them. So this is where the bulls were able to push up to, and then the bears regained. Now again, these wicks aren't lining up. I don't like this chart now that I'm working on this. These levels up here are getting to be a little bit less important. Same thing here, right? A bullish attempt, and a bullish attempt. So all of those are going to be resistance. Now you can go back in time. You can see the problem is that these are now going to be invalidated. Because this big red candle blew through here. This is not valid anymore. This is not the most. This is we've had price action cut through these levels. So these levels we don't need to go back to. We only need to go back to fresh levels. So if I keep going on this chart, here's all your Heath levels that I use. Now Heath would probably tell me I'm doing something wrong here, but these are the important ones that I see. And look. I love doing this confluence thing. I'll drag this over here and just try to get a little more high fidelity on that, right? So this is what I mean, but there's a ton of resistance. So what's going to happen is we're just going to ping pong between these on the way out of here. Even if we do it pretty fast, you're still going to get a lot of this activity. So you're going to get lots of CTM entries. So you can pick your level, pick your spot, and say, okay, I'm now comfortable that we're in a reversal pattern, and to take your CTM entry. Really, you get outside this, like, so this is the pattern. If you're doing a pattern trading, this is pattern trading, right? This is not price action trading anymore. This is now, what I'm drawing is this pattern on here. What Heath does is price action trading. He trades the interaction of price as it ping-pongs around these type of levels. I do layer in patterns and trend lines. I also use SMAs and fib levels. So I kind of a multi-hybrid. But I use Heath levels now. Obviously, the other thing, too, to keep in mind is if you know, Jordan taught a lot of people in the community how to do support and resistance using the 8-hour chart. And the 8 hour is great. So what he's doing, though, when you go find those levels, like you see a bunch of price action, you find your wicks, and you draw your horizontal support and resistance, they're going to line up really close normally with Heath levels because that's probably areas that the market has interacted with a lot. The advantage of using Heath levels is you get the most recent, right? So the only problem with longer term trend lines is that this price action over here is no longer as valid as this right here is far more valid than this stuff over here, for the most part, right? As long as, like, because we've cut through all this multiple times. We've gone up and down, up and down, and down. So, you know, what happened over here is not really that relevant because we've cut back through it and back up and down all through here. What really matters is what just happened. That's what the market's going to pay the most attention to. And I noticed when I started using Heath levels like this, and I just use the dailies. I don't typically go try to find Heath levels on the 4 hour. I don't care. These levels are, I have plenty of levels to work with just looking at the dailies, right? That's how I do it. It's my opinion, not financial advice. All right, you see this here? We had a big sell-off, and then we got a bounce by the bulls, and then the bulls got stamped back down right there. And look at that, the same exact level that the daily close. And I'll tell you guys, the most important levels to me are the daily close and open prices. In all of my charting, the most important level to me is daily close and opens. You can find stuff on the 8 hour, 12 hour, 4 hour, whatever. And you can look at weeklies. Weeklies supersede normally dailies, but weeklies supersede the daily levels as we come into the weekly close more so than through the week, right? So once a weekly is rolled over, Monday, Tuesday, the dailies typically are far more important of levels. The weekly comes into impact a little bit later. But nonetheless, the dailies are what I really watch, right, for my actual everyday trading. But so, this is going to be key resistance, 40,500. We've had two daily closes and opens with reversals. Bullish push got rejected twice at that level. We don't need to look at these levels over here. I don't need to worry about these because these failed below that level. So price action has invalidated these tops here. Now they're probably going to be mildly important levels as we come up into this level, and it's something to keep an eye on. But to me, it's not as critical of a level to keep an eye on at this point in time. Right? Right now we're down here. All right. The next important level is this. We got a little bit of a bounce here. Again, invalidated because we got a higher bounce over here. So, because this bounce, a bullish attempt here, was lower than this larger bullish attempt here, I'm going to ignore this one and not draw a level on that. Okay. So, I personally, and then Heath is probably, I really hope Heath watches this part of the video and comes and tells me I'm an idiot and explains why, because if he tells me I'm an idiot and explains why, then I'll get even better. We all will. All right. But this is the bullish push, right? So big sell-off. Bulls tried here. They got rejected here. So this is going to be interesting to see if something lines up over there. But ultimately, all this price action, the bulls tried to push up into here, 35.9, and got rejected. And what's interesting is we had a wick high on this candle right there. All right. The next level that comes into play is bears took control. Bulls, we got a bounce here and then a reversal. This next level, I don't know that this one's going to matter much. And the reason I say that is we had a bearish push back through, bullish push back above, bearish close right at, bullish open right there, and a bullish close right there. All right. So the next level I see is this one. This is probably a level to keep an eye on. The problem is the price is going to cut through. So if I look at ultimately, price is probably going to move through 34.5 a lot faster. because this bearish candle completely took out that what we would call a Heath level right there. It is still going to be probably valid resistance. I think this particular level, if you go back in time enough, see that close back there, there's been a lot of price action through there. So that is going to be a resistance to watch. It doesn't count as a Heath level in my book, or how I would use them, but I'm going to include that level because I see so many daily closings and openings right around that number that I'm going to go, actually at the top, check this out, go to the top of that bearish candle, bottom here, close. There's a bunch of opens and closes right on that level. So I'm going to keep that one on my chart. This attempt at a reversal here is exactly what we touched just now. Our next level of support is going to be this right here, which is what we touched as well. And then this is going to be a little bit of support, right? This change, 2 days, so big bullish days, two big bearish days, two small bullish days. These two big bearish days and this reversal down here is your final line. Now, and you're trying to catch, so for right now, I will say this. We know we're wrong if we take out this level on scalp plays or swing trades. Likely, it's still possible that we wick down below this and just bounce again. If we bounce again, it's just more confirmation that this ultimate support level is going to hold. But for trades, you know you have to get out of the trade here, because what very well could happen is if you get price action below this, especially a daily close below this, look at all this air void down here. There's nothing. There's nothing for a long time. And let's go back over here in time. Here's our last levels to watch. All right. A lot of bullish push. One day the bears tried to push lower, and then the bulls took control. So what I'm not 100% certain is if Heath would say to draw the Heath line at the top of this or the bottom. I'm going to draw at the bottom, and the reason is this is the level the bears tried, and then the bulls took back over, right? So that's 26,261. This area right here, bulls, we got the bulls capped the closing 3 days at that level and tried to push it back down, but couldn't ultimately. But they got that level at several days. That's 23,825. That's going to provide some reasonable support now. And then this attempt at a bullish push, and the bearish push, and the bulls took over 22. So this zone right here is what I'm really looking at. If we break down, I think everybody's and their mother is going to be screaming for a retest of the prior all-time high at 19.7, and I think they're probably not going to get it. The market likes to do stuff like that. I think this support level will probably be what holds. An example of that, let me just walk that through. An example that's this right here. We were all looking for the weekly low right here, this weekly low wick. And of course, that could still come into play. This is not necessarily a Heath level as far as drawn on the body as a closing open price, but it's a significant level. This is the lowest price that we've been for 2021. 29,774 roughly, whatever I have it there. So today, or last night, when we had these bearish closes, a lot of us, and I'm going to draw another like wick low right here, level, whatever, right? A lot of us were looking for, a test of either this 28.8 level or down to the 27.5 level. At that time, when I tried, let me go to the 4 hour, I tried to buy on this is a pretty significant level here that's not a daily Heath level per se. Actually, it might have been, hold on. No, I tried to buy on 30,400. Yeah, that wasn't a Heath level. What it was is a fib level. So I tried to buy right here. This is a fib level that could have held. Not Heath level. It was just a fib level. I tried to buy on this fib level here, thinking that we could get an early bounce, right? Put in a higher low and then get a bounce. And so I bought here, and I got stopped at break even. And so for me, the risk reward, I'm not going to just randomly buy between support where this thing just decided to reverse out of nowhere that I can tell. Like I couldn't find a really good, probably over here there was something that would have told us. But it wasn't, to me, the risk reward just wasn't there at those levels. The risk reward is either coming in at this level and try a scalp. So I was going to try a little scalp right here with a super tight stop just under it. And if I didn't get an immediate bounce, then, as it rolled over, Most likely it would have hit that and bounced, and then I'd be able to move my stop loss up to break even. So that's what I do when I scalp these. You know you're going to get a bounce, so I just move my stop loss up, and either it explodes out and I got me a piece of the bottom, or it rolls over and I get up. That's exactly what happened here at this, right? So I tried to buy at 31.4. I bought at 31.4. I had my stop at 31.3. It bounced immediately. And it just started to roll over. So when it hit resistance and started to roll over, I moved my stop loss up to break even, and it sliced right through it. It's a free trade. Got out at break even. I probably actually lost a little bit because of exchange trading fees, and I was going to try the same thing here, right? Okay, this 28.8 level roughly is a good level to try that at. This wick low over here, that wick low, whatever, whichever one you draw it at. So 28.9 is what I was trying to buy. 28.9. We never got down there. I would have had a 28.9 buy, and I would have had a 28.7 stop loss. And either it was just going to slam right through there. I was going to take a small loss, and I'll try again over here at 27.5. But 9 times out of 10, it hits this level, it has a little bounce. You have the opportunity to move this stop loss up to break even, and either this explodes out of here, and you caught the bottom, or it rolls over and it continues down, and you try it again, right? That was my strategy on those using those Heath levels to try to catch these bottom bounces. If we do roll over now, but this is an example, right? So this went on a tangent. I'm sorry, I do this. This price action here is an example of catching bulls and bears alike off guard. Somebody put in a floor right around 29.6. If you guys get on Twitter and you'll see Gus from Truth Capital was all over this. He said, "Look, guys, somebody's buying here. I haven't seen a solid floor like this in a while." And he took an entry right here. He saw that. I didn't like these wicks below it, and so I thought it was some lonely, reasonably sized whale that just decided they wanted to load up at that price for no reason. And I thought they were just going to get, crushed whenever they lost, whenever they lost their buying power. But it reversed on us, right? So this is he probably had some friends that I wasn't accounting for. But these wicks below, whatever that level was, is what got me to not try this. But I would have tried to buy here. This is an example of, again, everybody's watching this level and the market just doesn't quite get there. Another example.